Hello and welcome back to Global Value. In today's video, we're performing a fundamental stock analysis of TotalEnergies SE, ticker symbol TTE. Looking at TotalEnergies today keeps in line with looking at energy businesses. Total is one of the world's largest oil and natural gas companies, and currently they're trading for $60.60 per share, and over the last year, their stock has compounded at a rate of about 6%. So while this is below some of their other peers in the energy sector, this is still drastically outperforming the S&P 500 over this period, which is still down. Over 5 years, Total has only compounded at a rate of 1.5% annually, although the business has more than doubled from their lows in March of 2020. Over the last 10 years, Total is compounding at a rate of just under 2% annually. Going back prior to the global financial crisis, TotalEnergies has drastically underperformed the broader market. Over this period, they've only compounded their stock price by about 1% annually, rising only 14% over this time. One thing to keep in mind though is that Total is a major dividend payer. Right now, the company has a dividend yield of 3.9%, and their average dividend yield throughout this time frame would be in addition to this compounded annual return in their stock price. Over the last 10 years, Total has had a typical dividend yield north of 5.5%. So that's just another factor to keep in mind for this business. So Total right now is trading for about $5 below their 52-week high. They're up more than $15 from their 52-week low. Total is a French company, so their market cap here is listed as 139 billion euros. When we convert that to US dollars, their market cap is 159 billion US dollars. So Total is a very large business. For more background about the company, TotalEnergies is an integrated oil and gas company that explores for, produces, and refines oil around the world. In 2021, it produced 1.5 million barrels of liquids and 7.2 billion cubic feet of natural gas per day. At year-end 2021, reserves stood at 12.1 billion barrels of oil equivalent, 45% of which were liquids. The company owns interests in refineries with capacity of nearly 1.8 million barrels of oil a day, primarily in Europe. It distributes refined products in 65 countries, and it manufactures commodity and special chemicals. Total also held a 19% interest in Russian oil company Novatek, although recently they decided to withdraw their directors from the board, and they also took an asset write-down on the company. Also, at year-end 2021, Total's gross installed renewable power generation capacity was 10.3 gigawatts. The company also operates 16,000 service stations and more than 25,000 electric vehicle charge points. TotalEnergies SE was incorporated in 1924 and is headquartered in Courbevoie, France. So for our fundamental analysis today, we are performing the Select 6 analysis, taking a checklist-style approach of 6 standard financial metrics to come to a holistic and beginning understanding of Total based off of their business fundamentals. This analysis is still a work in progress and it's an evolving process, so it's going to continue to evolve and improve over time. With that said, let's get right into today's analysis. Starting things off with metric number 1, we want their average return on capital over the last 5 years to be above 14%. And there are 2 key reasons for this. The first is that over the long run, over the course of decades, a stock is likely to return approximately what its underlying business returns, and these business returns are going to be captured here by return on capital. The second is that the typical publicly listed business earns about a 7% return on capital. So by asking for a benchmark of 14% or higher here, we can potentially build in some margin of safety for ourselves based off the overall quality of the business being about twice as good as average. So Total, as an integrated oil and natural gas company, is going to be a commodity producer and refiner. Its return on capital numbers are likely to fluctuate with the overall price of oil and natural gas, and that's pretty well reflected here. Their returns on capital fluctuated somewhat coming into 2019, and then they really dropped in 2020 as the price of oil dropped dramatically. Since then, as the price of oil and natural gas have risen, Total's returns on capital have gone up by quite a bit. They earned about 12.5% returns on capital in 2021, and over their last 12 months, Total has earned about 25% returns on capital, which is drastically above where they were at throughout the rest of this time. However, when we average out their last 5 fiscal years, this only comes out to about an 8% average return on capital for Total. So while that's just slightly above the returns of a typical business, that's going to be well below that 14% benchmark we're ideally looking for. And so this is an X to start things off here on metric number 1. Next up, for metric number 2, here we're taking a high-level overview of the growth of their business. So we're looking for revenue, net income, and free cash flow growth. And this metric is going to be all or nothing in nature. Either all 3 of these are going to be up for this to be a check, or if even one of these is down, this entire metric will be an X. We'll also be taking into account their last 12 months worth of numbers in our calculations here. When we look at the business at a high level like this, we get to see the impact that the COVID-19 pandemic had on the business in 2020, where Total's revenues significantly decreased, their free cash flows were cut by more than 66%, and their net incomes went negative. However, there are a couple things to note about that. One is that it's nice that their free cash flows did stay positive, and that was not always the case for some of their other energy peers. And then also we get to see that the company has rebounded quite strongly since then. Over this time frame up until today, Total has grown their revenues by about 71%. Their earnings are up 2.5 times, although this is not going to be reporting their most recent asset write-downs, which happened in Q4 of 2022. And their free cash flows have more than quadrupled. This is very strong growth here across the board for Total. So this is a check on metric number 2. It's great to see that this growth is being led by their free cash flows, because free cash flow is really the lifeblood of any business, and a business can use its abilities to produce free cash flows to reinvest back in the business, pay dividends, buy back shares, pay down debt, or make acquisitions. So ultimately, a business's abilities to produce free cash flows now and until judgment day, discounted back by some reasonable interest rate, is what that business is going to be worth. Again, it's great to see such strong free cash flow and growth across the board for Total. This is our first check of the day on metric number 2. Next up for metric number 3, here we're taking the perspective of an individual shareholder in Total by looking at the company on a per share basis. We're looking for earnings per share growth over the last 5 years. We learned in our previous metric that Total's earnings are up by more than 2.5 times in this period. However, we still want to look at their shares outstanding to determine whether or not they've been diluting existing shareholders or buying back shares. Total has only marginally grown their shares outstanding over the last 5 years, so they've diluted their existing shareholder base by about 3%, which is much smaller than their earnings growth over this time frame. So this means that this is going to be a check here on metric number 3, as the business has seen strong earnings per share growth. Over their last 12 months, Total has earned $8.84 for each share that they've had outstanding. Next up, metric number 4 is going to be very similar. So here we're looking for free cash flow per share growth over the last 5 years. So similar to their earnings, we learned that their free cash flows are up pretty dramatically over the last 5 years. Their free cash flows have more than quadrupled, and with only slight shareholder dilution over this time, this is strong free cash flow per share growth for Total, meaning that this is another check here on metric number 4. Over their last 12 months, Total has produced $14.54 worth of free cash flow for each share that they've had outstanding. And so far, through our first 4 metrics, we have 3 checks and only 1 X for Total. Next up, for metric number 5, here we're evaluating how the business is utilizing debt. So we don't want to be investing in overly levered businesses, because during economic downturns, it's overly levered businesses that are going to be at the greatest risk of poor outcomes. So we want their net debt, which is their total debt minus their cash and their short-term investments, to be below the amount of free cash flow that the company has produced over the last 5 years. Total added on quite a bit of debt in 2020, especially as their free cash flows dropped. They hit a maximum of just under $42 billion worth of net debt. However, as the price of oil has rebounded and Total has grown their free cash flow since, they've steadily prioritized paying down this debt. Their debt load seems to be much more manageable today. Right now, Total has a $14.6 billion net debt position. And over their last 5 years, on net, the company has produced $51 billion worth of free cash flow. This is a lot of free cash flow to be able to comfortably support this debt load. So this is a check here on metric number 5, as relative to the debt that the company is employing, it looks like Total is very cash flow generative. Also, over their last 12 months, Total has produced $37 billion worth of free cash flow, meaning that they'd be able to pay off this entire debt load with only about 6 months of their current free cash flows. Again, we've seen this trend since the COVID-19 pandemic lockdowns, that Total has only gotten more cash flow generative while dramatically reducing their debt position. So with another check here on metric number 5, this means we have 4 checks and only 1 X through our first 5 metrics for Total. Then our 6th and final metric, the big metric of them all, we want their average free cash flow to their total enterprise value to give us a yield that's above 5%. If this is the case, this will potentially give us a slight risk premium to the yield of the 10-year treasury, and potentially offer us a reasonable starting point for a valuation of Total. Right now, Total's total enterprise value is $168 billion, and we're using their enterprise value because it takes into account both their market cap and their net debt position, and it's going to give us a perspective of the business that's more similar to as if TotalEnergies were a private company. So we learned in our last metric that Total has produced $51 billion worth of free cash flow over the last 5 years, meaning that in an average year, the company is producing about $10.2 billion worth of free cash flow. So when we divide their $10.2 billion of their average free cash flow by their $168 billion total enterprise value, that gives us about a 6.1% average free cash flow to enterprise value yield for the company, meaning that this would be coming in above both the yield of the 10-year treasury and that risk premium we're ideally seeking. So this is going to be a check here on metric number 6 on an average basis of Total's free cash flows. Also worth being aware of is that their last 12 months of free cash flow are significantly above this historical average, as we noted in our previous metric. Total has produced $37 billion worth of free cash flow in their last 12 months alone. So to get a current free cash flow to enterprise value yield for the company, when we divide their $37 billion of their last 12 months of free cash flow by their $168 billion total enterprise value, that gives us about a 22% current free cash flow to enterprise value yield for the company, meaning that Total has a current valuation of about 5 times their free cash flow to their enterprise value. And over the last 10 years, the company has traded at a median valuation of about 13 times their free cash flow to their enterprise value, meaning that Total seems like it's a very interesting business to dig into and learn more about. Please keep in mind that just because this is a check here on both a current and an average basis for Total, this does not mean that you're going to go run out and buy the business. This type of analysis is not financial advice, and it's not a buy or sell recommendation of any security. Instead, it's holistic and beginning in nature, and keep in mind that this is just one of our 6 metrics here. While these metrics are simple, when they're combined together, they can be very powerful. Plus, we've still got some interesting parts of Total left to cover. Then as a bonus here, we're taking a look at TotalEnergies' dividend profile. Right now, Total is paying out a dividend yield of 3.9%, which is significantly better than that of the yield of an S&P 500 ETF. And Total has been a major dividend payer throughout much of its past 2 decades. However, people make mistakes all the time by blindly chasing dividends, so it's important to stop and look at the underlying fundamentals of a business to determine whether the company has healthy financials and to understand whether their dividend is well supported by either their earnings or their free cash flows, depending on the type of business. For Total, we want their dividends to be supported by their cash flows, and that's been the case in 3 of the past 5 years. The most glaring year that they did not support their dividends was in 2020. However, the company did take on more debt, and then they did cut their dividends somewhat. In 2021 and over their last 12 months, the company has managed to adequately support their dividends with their free cash flows, and they've maintained a seemingly very reasonable dividend payout ratio, especially as the company has prioritized deleveraging the business. So if energy commodity pricing is likely to stay higher like it has been since 2020, and Total is able to keep up these levels of free cash flows as a more normative perspective for the company going forward, then it looks like they should be very easily and very comfortably able to support their dividends. However, keep in mind that because Total is an integrated energy company, the company is going to be operating in multiple cyclical businesses, and as a commodity producer, they're likely to be cyclical in nature with periods of both booms and busts. While those do depend on some external factors, that also depends on the amount of capex being spent, and it's largely been the case that there's been a reduction in capital expenditures since 2020 for the energy sector, especially for oil producers. That's just something to keep in mind as you're trying to understand Total's future free cash flows and how they'd be able to support their dividend or not. Everything we've discussed so far is important, but there's something missing that, in my opinion, is the main reason to analyze TotalEnergies, which takes us on to using a discounted cash flow model to come to a potential fair value for the business. So a discounted cash flow model is just like any other model in any other discipline. Its outputs are going to be sensitive to its inputs. So here we're starting with an average of their free cash flows over their last 5 years to give us a more normalized perspective of the business's abilities to produce free cash flows. Then we're using historical growth assumptions based off how Total has grown their free cash flows dating back all the way to 1992, so over the past 30 years, to project their average free cash flows out into the future. So it's up to you to do your own homework here to determine whether or not these are going to be potentially accurate and applicable going forward for the business, to give us a baseline projected estimate over the next 20 years for Total. So here we're assuming a growth stage for the company over the next 10 years where they grow their average free cash flows at a rate of 5% annually. Then we're assuming a terminal stage for the 10 years out after that, where their free cash flows grow at a rate of 4% annually. If we add in Total's tangible book value, which gives us a perspective of their tangible net worth, and we were ideally seeking a 15% rate of return from the company, which is the rate of return that Warren Buffett is looking for from businesses, then it looks like a potential fair value for TotalEnergies today is around $95 per share. That would be more than 50% above their current stock price, and it would look like the margin of safety in the company would point to the company being more undervalued than even fairly valued. However, please keep in mind some caveats here. One is that this rate of return would be drastically outperforming how Total has fared over their past 2 decades and more. Also, their dividend yield to shareholders would be included in this 15% rate of return, so we would not be doubly counting their dividends. Most importantly, a discounted cash flow model is based off the predictability of a business's future free cash flows. So again, Total operates in a cyclical and commodity industry. So there are reasons, some of which we've already covered, why the business's free cash flows may not be as predictable as the future free cash flows for some other types of companies. So it really just reinforces the need to dig in and do more work on the business if you're potentially interested in Total, although Total does look like it's a good candidate to do more work on. In just a minute, we'll talk about our recap for Total, but we have to address something first. What are some of the qualitative aspects of this business, especially those that support the key factors behind a potential long or a potential short thesis for Total? Starting with some of the key points for a potential long thesis for the business. Number 1, management's introduction of a competitive shareholder return target and commitment to dividend growth sets clear expectations for investors. Number 2, Total will be able to capitalize on greater global gas demand and price volatility with the expansion of its liquid natural gas portfolio model through new equity and third-party volumes. And number 3, although investing for the energy transition, Total remains committed to hydrocarbons and expects to increase production through mid-decade, including new liquid natural gas and oil projects. Then for some of the key points around a potential short thesis for the company. Number 1, Total's relatively high exposure to Russia, which is 17% of production, and their decision to remain in the country adds a level of uncertainty to the company that could weigh on shares. Number 2, investment in renewable power generation holds risks as it's a highly competitive space and it's unlikely to generate material free cash flow for the next 5+ years. It requires the use of leverage and farm downs to lift returns. And number 3, Total's strategy of growing hydrocarbon production in the interim while investing in decarbonization for the long term is unlikely to satisfy investors looking for one or the other. Hopefully that offers a potentially balanced perspective around some of the key points for Total's business. Now it's time for a wrap up. So in summary, TotalEnergies checks the box on 5 out of 6 of our metrics. The company has grown strongly across the board over their last 5 years. While they have diluted existing shareholders by about 3%, the business has been strongly committed to deleveraging itself since the company took on more than $42 billion worth of debt in 2020. Since then, though, they brought this down, and this is now well supported by both their average and their current free cash flows. And on both an average and a current basis of their free cash flows to their enterprise value, it does look like Total would be an interesting business to dig in and learn more about, and that they could be potentially attractive relative to the yield of the 10-year treasury. Our only X of the day came when we looked at Total's average returns on capital, even though they produced significantly above average returns on capital over their last 12 months, coming in at about 25%. More typically, the company is just producing slightly above average returns on capital, but below the benchmark we're ideally looking for. Then, not necessarily surprising when we looked at their dividend profile, because of some of the fluctuations in energy commodity pricing, Total has been able to support their dividends in 3 of the past 5 years. They've had a couple of years where they've missed out on supporting their dividends with their free cash flows. However, since 2020, the company has strongly supported their dividends with their above average free cash flows. And again, they've really committed quite a bit of their free cash flow to paying down their debt. Finally, when we performed a discounted cash flow analysis of Total, based off of that, if you've done the work and you believe those historical growth assumptions, then it looked like at today's valuations, if you were seeking a 15% rate of return for TotalEnergies, that an approximate intrinsic value for the company is around $95 per share. Again, there are a number of reasons why that might not be potentially accurate for the company, even though that does look like that's significantly above their current stock price. So please make sure to do your own homework here, and it's worth reiterating that this type of analysis is not financial advice. It's not a buy or sell recommendation of any security, and before considering any potential investment decision, please consult with your financial advisor. This analysis instead serves as a beginning and holistic understanding to help you determine whether it's worth your time and energy to dig in and learn more about TotalEnergies. One resource that will definitely help you stay up to speed with what's going on in the market and help you learn more about the business is Seeking Alpha. Checking out Seeking Alpha directly supports the channel as I'm part of their affiliate program. So most of you probably know Seeking Alpha as a source of community-written articles on different stocks. But over the past little while, they've actually become a lot more than that with their new offering, which is Seeking Alpha Premium. Premium has a number of different features where you can track buy, hold, and sell ratings on your favorite stocks. These ratings are from the Seeking Alpha community, Wall Street analysts, and Seeking Alpha's algorithm. You can see earnings call transcripts, investor presentations, SEC filings, and press releases all in one place. You can add your own margin of safety targets and get alerts for when your favorite stocks hit that level. You can get unlimited access to Seeking Alpha articles, and you can tailor your reading experience based on the type of investor you are. You can get 10 years of financial data on any stock to help you with your analysis. You can also import your portfolio into your Seeking Alpha dashboard to make researching easier. And if that didn't convince you, the best thing is that an annual plan is only $119. That's just 33 cents per day through my referral link down in the description below. Normally premium is $239, but if you use my link, it's 50% off. So check it out if you're interested. Through this deeper research, you'll learn more about the qualitative and the quantitative aspects of Total, and you'll likely be able to determine for yourself what a reasonably appropriate intrinsic value for TotalEnergies will be. So as a value investor, you're ultimately trying to conduct this research as if you're going to own 100% of a company, and you can truly understand the ins and outs and understand the essence of the underlying business. So with that said, that's it for today's analysis of TotalEnergies SE, ticker symbol TTE. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about Total with me, and have a great day.